Wall Street has had its worst August in more than 10 years, down 4.5%, as fears grow about the strength of the recovery. The economy is still growing, but unemployment is close to 10% and the housing market is still in trouble. Earlier, I spoke to David Wyss, Standard & Poor's chief economist. David Wyss, thanks for joining Lateline Business.
Thank you.
How likely is a double-dip recession in the US?
Well, it could happen. It's a slow recovery. A slow recovery is a fragile recovery, and any hit from outside could turn it into a second dip. My guess is about one chance in three.
You say your chances, you think 1 in 3. What are the likely indicators that make you believe that there will be a recession? Housing market, those sort of factors?
Well, the housing market's taking a double dip, but we expected that. We knew that the strength we saw in the spring was bought because of that big tax rebate program that expired in April. So we expected things to dip back there. The big problem is the consumer. Consumer is just scared. He doesn't want to spend. He's being more cautious. As individuals, I applaud that because we should be saving more money. But from an economy standpoint, we'd really like to get people out there living beyond their means like normal.
Is the consumer not spending, though, because of those big mortgages on houses?
Well, to some extent that's true, but I think the bigger thing is he's just scared. He got caught with too much debt last time. He's worried about savings, especially with a lot of us approaching retirement age. And he's worried that he needs to build up some savings in a hurry. Basically, he's right.
Consumer spending has been up slightly last month, or better than expected. Is this enough to keep America out of a recession?
What we're seeing now is enough to keep us out of recession. Final demand growth has been growing about 2.5% at an annual rate for the last 4 quarters or so. That's positive, it's good, but it's not a lot of strength. And the worry is if the consumer gets hit by something else, say an oil price shock or another financial meltdown, they could pull back into their shell very quickly.
You say growth's at around 2.5%. If that hovers around there, goes to 2%, even slightly lower, how worried are you about a growth recession where growth is so low it creates low unemployment?
Well, at 2.5%, we're expecting growth to be between 2.5% and 3% for the next couple of years. That's enough to bring the unemployment rate down, but not very fast. We're just seeing a very slow improvement in the unemployment rate. Obviously, the politicians would like to see it coming down more sharply. They have a better chance to get reelected that way.
So a jobless recovery?
Well, we are seeing a bit of a jobless recovery, but I caution people every recovery at this stage is a jobless recovery. In fact, employment's turned around faster in this recovery than in either of the last two.
What else can the US do to stimulate growth?
One of the problems, we're sort of running out of tools. The government is spending, I think, as much as it can afford to. I think the deficit needs to be brought down. The Federal Reserve is already taking interest rates down to 0. You just can't cut them any farther. You can do some more quantitative easing, but quantitative easing basically operates to bring down other rates, and those other rates are very low. Long-term government bonds are already at 2.5%. How much lower can you push them, and would it do much good? I don't think we have many tools left.
So Ben Bernanke has no option?
Well, he'll have to do more of the same. I'm afraid that he's pushing on a string, but it's the only string he's got to push on.
Does the US not need a period of readjustment?
Well, we need a period of readjustment, yes. We're going to have to see a deleveraging of the economy, particularly a deleveraging of the consumer sector. But frankly, it's easier to do that with the economy growing than if you're looking at double-digit unemployment rates.
Japan in the 90s was once described as loser's paradise. Many companies were too debt-ridden to do much more than survive on bailouts. It took years to recover. Is this a risk in the US?
There is a risk of this in the US. I think the good news is that Chairman Bernanke was a student of the business cycle, and particularly a student of Japan in the 90s. I think he has a good idea of the mistakes that were made by the Bank of Japan, including not stimulating enough. And I think he will avoid those mistakes. But just because you know what somebody else did wrong doesn't necessarily mean you know what to do right. And I think there's still a danger that this deleveraging of the economy will push the U.S. into the same kind of deflationary spiral that we've been seeing in the last 20 years in Japan.
You seem confident that growth in the US will be around 2 to 3%. The housing market is in a terrible state. Surely any prerequisite for any lasting recovery is a stable housing market.
Yeah, the housing market has to stabilize. I don't think it has to be the leading sector in the recovery, but it can't continue to be a burden on the economy. But the fact is the housing market can't cause a recession anymore because it's got to be too small. We've already taken construction from 6% of GDP to 2%. Even if it goes to zero, it can only cause half as much damage as it already has.
But surely a stable housing market underpins consumer confidence.
If home prices continue to drop at double-digit rates, yes, I'll be concerned about it. Because that's going to lead to more foreclosures, it's going to lead to losses of wealth. But housing prices are already back below their historical average relative to income. They've been rising for the last 6 months. It looks like things are stabilizing in terms of prices. We do expect sales to go down. I think you will see another price dip once this stimulus program, once the tax rebate runs its way through. But I think it won't be as bad as it was a year ago when we were looking at double-digit declines for 2 years.
David Wyss, we'll leave it there, but we'll all be watching the US closely. Thanks for joining us this evening.
Thank you.